Your new landlord just spent billions of dollars buying up every house they can find, and it won't stop. You came here for the truth, so let me unveil that for you. This is a very serious topic because we're talking about the institutionalization of real estate. It's been going on forever, but that was primarily in the commercial side. You saw that, of course, with multifamily, when these properties are 100 units, 200 units, 300 units. Of course, there's going to be corporations involved. There's going to be REITs on top of it, but now it's taken to a whole nother level because this is single family homes. It's been going on for a long time, but now we are seeing it taken up a notch. That's number one. Real estate is the topic of the day. I also want to talk about the Fed walking back inflation. You remember that? Oh yeah. And now they're walking it back. Of course they have to. And number three is jobs. We're going to get into all of that and more. Let's begin. Another day, another repo operation. Let's take a look. It has exceeded its previous high and is now at $791 billion for this reverse repo operation. I want to see when this goes to $1 trillion. It's going to happen. It looks like it is. I wanted to talk about this first. And by the way, we're going to get into more information about the Fed today, but let's talk about real estate first. This has been the name of the game for how long now? Over a year, it had really accelerated. The prices rising considerably. There was this few-month gap where everything was down because of all the uncertainty, but after that, it just skyrocketed. U.S. existing home prices hit a record high in May. Median existing home price rose 23.6% in May from a year earlier to $350,000. This is in the US, but look around the world. Same situation. I made a post about this on all of the social media. By the way, if you want to follow me on any social media, you got original content coming on there. Okay? It's original stuff. So you got to check it out. LinkedIn, Instagram, Facebook, Twitter, name it. I'm on there. Check it out. Search the Money GPS. U.S. home prices experienced their biggest annual increase in more than 2 decades as a shortage of properties and low borrowing rates fueled demand. This has been something that's been going on, of course, but truly accelerated in the recent past. If you look at the chart, you could see existing home sales have been declining month after month after month. It's been going down. Why? Although you've had mortgage rates that have been down significantly, the prices are just unbelievable. So for some people, they're kind of just waiting and seeing at this point. And then we take it to this. We've got BlackRock doing one thing, but Blackstone is doing another. Blackstone bet $6 billion on buying and renting homes. Like I said, not multifamily properties where you would need to have institutional money behind it. These things are huge. Hundreds of properties. They've got this big pool. They've got facilities, everything else. Different story. We're talking about single family homes. They're getting into this game more now than ever before. Deal for Home Partners of America, owner of over 17,000 homes in the United States, is the latest sign Wall Street believes the housing market will stay hot. And you could zoom in over here, take a look for yourself. An investment firm basically said that it reached a deal to acquire this investment firm, reached a deal to acquire Home Partners of America. They own 17,000. They rent them out and offer its tenants the chance to eventually buy. Are they able to eventually buy? I don't know. That's a different story. U.S. home sales soared to the fastest pace in 14 years. Of course, I'm connecting that information. This is what I do on the channel. The lack of homes for sale relative to the demand has pushed homes up to record prices, and we know how this goes on. Blackstone was among the big investment firms to buy houses in the bulk of the aftermath of the subprime crisis. We know that. We've talked about this before. When lenders sold off their foreclosed homes at marked down prices, the New York firm built a portfolio of tens of thousands of single-family homes, then rented them out. So what do? Institutional money, all the capital that they have. They saw these homes being sold for pennies on the dollar. Everybody's struggling. They had to go rent. Well, what do? This big company comes in with their cash. They buy up all those distressed properties. They know that the price is going to appreciate, but more importantly, they can get the rental income. Maybe they've set up a REIT, real estate investment trust, and that is a way for them to passively provide themselves. They own the assets, but they can passively provide income not just to themselves, but also to the investors. At least that's the goal. In 2019, Blackstone exited from the single-family rental business when it sold its last shares of this company, which had become the largest U.S. firm in this industry with 80,000 homes for lease. And then things have changed. They talk about Toronto in here as well. There is more information, okay? Check it out, because you're seeing this happening today and it's accelerating. Why? Because borrowing costs are so cheap. This is an article talking about Canada. Housing market, quote, gone berserk, stirs unease over investors' clout. Investors account for about 20% of new mortgages in Canada, and critics say the first-time buyers are getting shut out of the market. 20%? I mean, that is outrageous. That's outrageous, of course. A home like this, does it say where this home is? Look, if this was in Toronto, that home right there, that's considered in a desirable neighborhood. That's considered, that's probably a duplex, it looks like. Duplex or a semi-detached home. That's considered a wide lot. Wide lot homes on a semi-detached or duplex property, you're talking maybe 1.8 million Canadian dollars. 1.8 million. And you could verify that if you'd like. My net worth has obviously gone up a lot, just based on what happened this year, because the market's gone berserk. This right here, this particular area they're talking about, Barrie is probably about 1.5 hours from the downtown core. So financial sector, downtown core Toronto, Barrie about 1 hour and a half maybe from the downtown core. Now, because of the prices, this guy's worth millions of dollars, right? Are they going to start taxing people on their millions of wealth? We'll see. We have a housing crisis here. Prices have gone up 40% in the last year. Remember what I said here. This place is 1.5 hours from the core. The demand for housing is not going down. There's always an opportunity, so they say. Investors account for nearly 1/5 of new mortgages in Canada, the same share that prompted a crackdown in the UK, and roughly 5 times the rate in the US. So there's some craziness happening today. This is talking about inflation here. Have you noticed how much it costs to fill your fridge these days? The sticker shock is what they're talking about. I've heard that term mentioned many times recently. The cost of produce, the cost of meat, deli, things that are being prepared have gotten more expensive. They've gone up, they've doubled. Red meat, they've gone up, but it's not just meat, as they say. National Bureau of Labor Statistics, cereal and bakery items are up 5%. Fruits and vegetables are up 1%. Not so sure about that. You can let me know in the comments. Dairy products are up 0.6%. Now you got to watch out, because a lot of these are being subsidized and controlled by the governments. We know that particularly in the dairy industry would probably be completely of a complete failure in terms of its ability to stay afloat without the government being there. But that's a whole different story. They get into more details, but I've covered it so many times before. Stocks climb after Powell's inflation reassurance. So I wanted to show you what's going on in the markets right here, and also wanted to cover Bitcoin. I think I have an article about that as well. So while I have Bitcoin up, I wanted to show you this. So it had gone down. Why? Well, there's been many things, the crackdown in China on the miners and so on. But if you can see right in this range here, this is the death cross. And the death cross experienced with the 50-day and the 200-day, but it's also on different indicators as well. Okay, so essentially, when you have the price falling too far, too fast, you generally get the death cross, okay, over the moving averages. But all you need to know is when you have real big, let's say, the golden cross on the way up, a death cross on the way down. When the price moves dramatically in a short period of time, you get that. And it usually brings in more selling. Now, you're seeing it moving within this range for this period of time. So essentially, since, let's say the 22nd or 23rd of May, up until today, it's been up and down, up and down. It's up over the past, day or two, currently sitting at just under 34,000 at the time I record this video. But you got to know, see where that line I just put is? That line is basically a support level. So around this $33,000 range, Bitcoin tends to find its support. You see gold. Take a look at what has happened here. I showed you how it's coming down significantly at a time when Powell is basically saying, hey, it's risk on, risk on, risk on. Well, of course, gold is going to do poorly in that type of environment because, hey, nothing's wrong. Why do you need to worry about it? The dollar has been moving, as you could see, it has been in a upward direction generally, but there has been somewhat of a loss of momentum. The stock market has been doing this, the S&P 500 has been doing very, very well. I'm pulling up the daily chart in this case here, and it did break through its moving averages, if you look at here, but essentially, all I'm trying to show you is that it has been generally very positive, particularly for the S&P. Even the Dow Jones in the previous trading session had bounced up somewhat. Why? Because the Federal Reserve is telling you everything's okay. In this right here, Jerome Powell had to come up and actually speak to the Congress and essentially just reiterating the points that there's nothing to worry about. Fed will not raise rates on inflation fears alone. This is what he said. Check this out. Quote, "We will not raise interest rates preemptively because we fear the possible onset of inflation. We will wait for evidence of actual inflation or other imbalances." Look at what I just covered. Look at these imbalances that are there today. Do you think those things are just going to turn around tomorrow? Do you think Kraft Heinz and Procter & Gamble and all these different mega corporations and conglomerates are going to bring the prices down? I mean, really? Does anyone actually believe that? Recent price increases have pushed consumer price index to a 13-year high. We have unstable employment and higher inflation. Something has to give. This is what they're saying here. And it's so important to look at this stuff. Not just the quotes, not just who's talking. But as Powell says, we will not just look at the headline numbers for unemployment. We will look at all kinds of measures. That is the most important thing we can do. Oh yeah. When things are looking, in this situation where they have to have an excuse to pump the money in, well, we can't just look at the U3 unemployment rate. But when it's suiting them, okay, then they'll just take that into account. Fed Chair Powell says it's very, very unlikely that the U.S. will see 1970s style inflation. And you know what? We can trust them because they love us. Money GPS Insights time. Number 1, your new landlord will be a mega corporation. Number 2, more than any other group, these corporations are taking advantage of super low interest rates right now. And number 3, most importantly, as the prices rise, first-time home buyers are being left out. And of course, they'll have to rent instead, renting from one of these mega corporations. Real quick, let's talk about these few things. Number 1, this article here is just saying that they're having trouble keeping people. They're having trouble hiring people. This is a continued situation. Airports around the country will share $8 billion in federal grants, remember, not loans, to help them recover. And of course, this is still going on. We're seeing this now, even though supposedly the airlines and so on have seen a rise in the amount of people traveling through. We've seen that statistically. And this is giving us an example of what's been happening there, because you look at just the CPI, Consumer Price Index, And there has been a disparity here. The more critical point here, that the massive spread between the PPI and the CPI is truly worrisome, because you wonder what isn't being taken into account. And you got to get the broad spectrum, the broad picture of what's happening. And clearly you look at the PPI and things are off the charts. Same situation in China, same in the US. It's all over the place. And you see what investors are doing. My goodness, the amount of margin is absurd today. And of course, yet again, a record high. I wanted to know this from you. Krispy Kreme looks to raise as much as $640 million through an IPO. My American friends, is this still popular? Are people still going to Krispy Kreme, or is this the company's on the way out? So now's the perfect time to have an IPO. Let's rush in and get an IPO so that we can walk off, pump and dump. I don't know. You tell me. If you found the video informative, hit that thumbs up button. I appreciate it. And don't forget to join up to the Insiders. The Insiders is my way of getting to you, and look forward, in the next couple weeks, I'm going to be including original content inside of the Insiders. Okay, this is my email to you directly. 5 days a week, and you get an email. It's going to contain now original content, but also the video of the day. Sign up for free at themoneygps.com. If you haven't already, definitely check out this video. A lot of content. It's right there for you. Click it, and I'll see you there.